Well, oil is just moments away from settling for the day, and no matter how it settles, the real winners from this oil crash will be you, the consumer. Kautbaum Capital Management President, Fox News contributor Gary Kautbaum is with us, along with Doug Flynn. Gary, let me get your take on this, because there's a serious debate going on. Some saying this is a reflection of slowing global economy. Some saying it's just overproduction. I know that we've seen our inventories build. Last week we had 12 rigs come back online. So where do you stand on this?
I think the amount of the drop in the period of time tells me that this is more about the future of the economy. And by the way, Germany this morning came out and their GDP was down year over year. So we're starting to see some of that. The good news is every 10 cents drop at the pump over a 1 year period is $10 billion staying in the economy instead of going to energy prices. That is a huge help to the transportation business, huge help to just anything you make out there. But look, we just came down, and let's hope we stay down. But again, I do believe this is forecasting some issues as we move forward around the globe and also here.
And that's the part, Doug, that's not debatable. Mm-hmm. This helps the American consumer big time. I mean, the numbers are astronomical. 1 cent equals $1 billion. Where does that money go? Now, in past times, past dips, I would say that people kind of put it in a coffee can. But if you couple this with higher wages, growing economic confidence, job stability, since there's 7 million of them out there not even that are vacant, maybe it goes into the economy. And if that's the case, what areas should benefit? As an investor, trying to figure out how do I make money on this?
Well, on top of that, you've got average hourly earnings. The net discretionary income is up big time over the year before. So if you get that with a little bit of a lowering price of oil, that's even more money down to the bottom line of the consumer. So I think some of it does get saved. I think a bunch of it gets invested. Maybe they pay off debt. The consumer balance sheet is in fantastic shape. But if you're looking in the oil area for some bargains, you want to look at some of the exploration and the areas that aren't necessarily tied to the price of oil per se, but are still going to be doing a lot of drilling and exploration.
But oil services names are the ones that are hammered the most. Ensco and these names are down like 50, 60%. What about on the consumer side? Any retail names out there that you like?
I like things in the exploration, like EOG and ConocoPhillips.
You do?
Well, because, first of all, EOG is like a North American version of that. And so it's down 20%, but the outlook is quite good. Even, you have to think about the U.S. coming online and becoming more and more, and possibly one of the biggest oil exporters in the entire world. If not already, they're right there. So that's where we're going. I think that keeps oil prices down, but there are some opportunities in there as well as that expands.
I like ELG, I like Concho, I like Pioneer, and all of those names. They are under some pressure. Now, what are you buying in this market, Gary? Anything? I mean, I know you've been skeptical, and you've been right. But at some point, questions that people ask me all the time is, Charles, when does it stop and what do I buy? So I'm passing that question along to you.
Here's the problem right now. Just go and buy a stock and see what happens within 3 days. You're losing money, and that's how you know you're in a rough market. So I'm just sitting back and I have my feet up. I'm 100% cash at this point in time because of what I just said. We're in a bearish market right now any way you cut it. And in bearish markets, good news is bad news, and bad news is even worse. Today, they went after the financials in a big way. And I must say, if we break the lows, 3 weeks ago, I called for a low in the market. If we break those lows, we will be talking about a bear market for the indices. Now, I'm not there yet, but you just look at the action. The strongest stocks in the market are mostly defensive. That's utilities, discount retailers, and the like. And I'm just taking a powder right now. I think there's going to be better times ahead, but I think we're going to have more price and time. And by the way, because people get all depressed about all this, bearish markets do happen. We've had them for the last 100 years, and when they're over, you make big dollars. You just got to, wade your way through them while they're going on.
You also at some point have to have the nerve to buy them, right? Because what I noticed, if you go back, for instance, to March of 2009, I must know 10,000 people that were going to buy the next leg down, right? After that March 2009 low, they promised me, Charles, I'm in on the next dip. Well, the next dip never came.
Let me put it the best with one line. I would rather be a little too late than too early, especially if this one has another leg down, because the next leg will be more vicious than the first one or two. And again, the most important point is, I test things out, not by buying anything, but like, okay, I'm looking to buy this, and 3 days later it's down 6 points. So until that dynamic change, I just sit back and relax and know that it'll end, and it just may take a little bit more time.
Real quick, Doug, what are you looking at?
I mean, so for me, it's with your long-term money and money you're not going to touch for 10 or 20 years, having some dry powder on the side is a good thing. I would tend not to try to time it to get back in, but look for those opportunities that are beaten down
Anything
more than the average.
Anything specific you're looking at in this sell-off right now?
We're definitely looking at some areas like in the financial area, which is going to get beaten down, some of the regional banks. You've got to get hyper-specific. You can't just blanket buy the whole sector.
All right, Doug, Gary, thank you both very, very much. Appreciate it.
Thank you, Charles.
Hey, coming up next.